Welcome to ForexTV.com's PM Exchange. It's Monday, December 3rd. I'm Remy Hoki. Today I'm joined by Rudy Narvas, Senior Analyst at Forecast. Rudy joins us to discuss the week ahead and levels for the major currency pairs. Good afternoon, Rudy.
Hi, Remy.
Great to have you on the show again.
Thanks for having me here again.
Well, as we start off the week, we're seeing equities head a little bit lower as we end the session. And earlier today, we got the ISM manufacturing data, which managed to hold above 50, but was slightly lower than expectations. So as we start off the week, if we could start out with the currency pair of euro-dollar, which has been fairly range-bound in the session. Going ahead to the coming sessions, if you could give us your range for euro-dollar.
Oh, okay. Well, euro-dollar should remain range-bound until the ECB meeting later on in the week. We don't expect any change in the meeting, and with ECB speakers coming up right before the meeting, we don't expect them to give any hints that the bias has changed at all. So we should see it pretty much range-bound. Traders or longs are looking for a close above 147.50. To see if it can attempt to break at 150 with support at 145.80. As far as dollar yen goes, dollar yen has been creeping higher, largely because of the weakness in the equity markets. Actually, strength in the equity markets that we saw end of last week. But it should stay closely linked to equity. So wherever equities go, dollar yen's going to go the same way. For now, we're looking at a range of 111.60 and then 109 for the yen. As far as the pound sterling goes, you have the MPC meeting coming up. We don't think there's going to be any change, but you did have the shadow monetary policy committee meeting, and it did show some wide ranges of opinions, including a 75 basis point rate cut by one, and two on the shadow committee calling for 50. So whatever happens, it could be a crapshoot. But on the other hand, we saw sterling pretty strong today, so they weren't really paying attention to what the shadow committee was thinking. Heading into the tomorrow session, we should see sterling trade around 2086 and between 2055 for support.
Okay, Rudy, since you mentioned the central bank meetings, we also do have the Bank of Canada meeting tomorrow at 9 a.m. And then on Thursday morning, we have the BOE and ECB rate decisions. So looking ahead also to next week with the FOMC, if you could briefly give us your rate outlook for the major banks.
Well, for the Bank of Canada, we're expecting 25 basis point rate cut. I think the Bank of Canada has signaled that there is problems in credit markets, and the tightness of credit markets is impacting its global forecast, which should depress its inflation forecast going forward. Markets have almost fully priced this in, and arguably they've actually fully priced in more because dollar CAD has moved from 90 back to parity within a couple of weeks. So the market has pretty much priced this in. And we're looking for another 25 after that with the risk of more. So by H1 2008, we're looking at a Bank of Canada rate around 4% or even lower. Looking at the BOE, we're not looking for the BOE to do anything quite soon, but there is going to be an easing bias. Look for a rate cut sometime early next year. And as far as the ECB goes, we're not looking for the ECB to do anything for some time. I think there is upside inflationary risks there, but at the same time, too, they do have an offsetting tightness in the credit markets as well, which we're seeing around the world. Going forward to the Federal Reserve, I think the Federal Reserve, given Bernanke's comments and Cohn's and Krosner's comments at the end of last week, the market is fully priced in, a rate cut of 25 basis points. But the question is now, is it, it used to be, are they going to cut it all? Now it's going to be, is it 25 or 50 basis points? The make or break for that could be payrolls. If payrolls does come in exceptionally weak, it could put 50 basis points in the bag, given the fact that credit markets are still tight, and the interbank lending market, given certain gauges of it, looks incredibly tight, which is suggesting that banks are really afraid to lend money to one another, which could restrict credit and impact you and I, given our credit cards or our mortgages.
Well, Rudy, you gave us your expectations for rates in terms of the Bank of Canada. And in afternoon trade, dollar CAD has been fairly range-bound, and throughout the session it's been moving up and below parity. But going into tomorrow's session, following the rate decision, what kind of price action do you expect to see for the pair?
Well, I think the market will be disappointed if the Bank of Canada doesn't, cut rates at the meeting. But at the same time, too, the Bank of Canada has a habit of also expressing a bias. And if they do express a bias towards a rate cut, not now, but later, it could mean nothing for the currency. So we do expect the CAD to begin to continue to trade in range, between 1060 and 99 cents. And within that range, I think it'll be very difficult to say where it's going to go from there until we get a headway of where the U.S. economy is going.
And I want to move on to discuss the crosses. One cross I'd like to discuss is euro sterling. We've seen the pair come off recent highs, multi-year highs that we've seen in previous sessions, and it traded below spot 71 in the session. And you just gave us your expectations for the central banks. Today we saw stronger than expected data from the Eurozone and also stronger than expected PMI manufacturing from the UK. So if you could just give us your forecast for euro sterling.
As far as euro sterling go, I think that the sterling is probably going to underperform versus the euro, largely because I think that the credit concerns and also what's happening in the UK housing market and other sectors of the UK economy are going to cause the BOE to ease rates faster, if not faster than the euro, who may not even cut rates at all. So, given the fact that's the case, we don't expect any large sustained gains as far as the pound goes versus the euro.
Okay, and now that we've covered the majors and the euro against the sterling, if we could move on to the Aussie dollar as well as the Kiwi dollar. Going ahead to the rest of this week, if you could tell us what fundamentals as well as technicals traders should pay attention to.
Okay, well, there is a central bank meeting in Australia happening later on this week. We don't expect much to happen there, but we do have a bias towards a rate hike in Australia. There are upside inflationary pressures there, and the Central Bank of Australia has noted this time and time again. So we do think that a 25 basis point rate hike is in the cards, which could assist Aussie even further. Which it has been performing other that and the Kiwi have been outperforming the other commodity currency, which is CAD, during this sort of past few weeks. So we do expect that Aussie to continue to perform well against other currencies. Although with the carry trade, the yen, it's difficult to say given we don't really know where equities are going over the near future.
Okay, and last but not least, before we wrap it up, if you could give us your expectations for non-farm payrolls, which is coming out on Friday. The market will be paying attention to that data as well as also keeping an eye on the credit crisis and the housing market downturn. But how do you see these the non-farm payrolls figures fitting into the bigger picture?
Well, first of all, we think that non-farm payroll is going to come around 60K, a little softer than market expectations, but some other leading indicators have been telling us that this is going to be a soft one compared to the previous month. As far as the Fed decision goes, I think payrolls is always important, but they always have to be very careful of 1 month of data because it's highly volatile. But if it does come exceptionally weak, I think this could push some members of the Fed over the top into looking not just at 25, but maybe talking about 50 basis point rate cut. I mean, the Fed has already talked about, Bernanke has talked about how credit markets are already exceptionally tight. And it's tighter than they were expecting to be, given that they've already had 75 basis points of easing. And Bernanke's research in the past and Cohn's and Mishkin's has all suggested that these preemptive strikes are necessary because the banking sector is quite important to economic growth. And if the banking sector decides to tighten up credit, it'll impact the rest of the economy, just down the line from the mom and pop business to GE. So it's something that they're really looking out for.
Okay, Rudy, as always, thank you very much for insight and analysis.
Oh, you're welcome. Thank you.
This has been your Forex News with Rudy Narvas from Forecast. Next up, we have your equities and commodities wrap-up for the day. U.S. stocks ended lower after seeing gains in the previous 4 sessions. Today, financial shares fell on renewed concerns about the impact of the housing market downturn. The market also weighed the latest U.S. economic data. The ISM's manufacturing index fell slightly to 50.8 in November. The positive highlights in the ISM report include the gain in new orders. They were up slightly to 52.6. Meanwhile, production showed an increase to 51.9. At the closing bell, the Dow Jones Industrial Average ended down 57.15 points at 13,314.57. The tech-heavy Nasdaq fell 23.83, ending at 2,637.13. The S&P 500 also fell 8.72 points, closing at 1,472.42. In the fixed income market, Treasury prices rallied over continued worries about the credit market. Moody's Investors Service may cut ratings of $105 billion in debt on SIVs. The benchmark 10-year Treasury note rose with its yield down at 3.89% from 3.97% late Friday. The 30-year long bond rose with the yield down at 4.35% from 4.4% on Friday, while the 2-year note gained with its yield down at 2.89%. And in energy, NYMEX crude oil futures ended the session higher after seeing weakness earlier in the day. The market awaits OPEC's decision on increasing oil production on Wednesday. The benchmark crude contract fell to an intraday low of $87.20 and gained towards session end. January crude closed up by 60 cents at $89.31 a barrel. And in other petroleum products on the NYMEX, January RBOB gasoline rose 1.95 cents to close at $2.25.01 a gallon. January heating oil fell 0.39 cents at $2.51.11 a gallon. Meanwhile, January nat gas futures fell 8.8 cents, closing at $7.214 per million BTU. And over in the metals complex, gold futures ended up on the day regaining some strength after tumbling in the previous few sessions. Earlier, the benchmark gold contract hit a low of $788.80. February gold gained $5.60, ending the session at $794.70 an ounce. Meanwhile, other metals prices ended mixed. December copper fell 9.6 cents, closing at $3.06 a pound. March silver added 4.5 cents, closing at $14.21 an ounce. Now we're joined by James Mound from James Mound Trading Group and author of the Mound Report. He'll give us his commodities outlook for the week ahead.
This is James Mound for MoundReport.com with the week ahead for the week of December 3rd. Got about 2 weeks left before we go into holiday trading period where the volatility and volume become very sporadic in the markets. We tend to go on vacation that time of year. But for the next 2 weeks, we got a couple of major events happening that will cause some extreme volatility in the market, and there's some action here to trade. So without further ado, let's take a look at some markets that are going to see some price action the next couple of weeks. First, the currency sector. Saw some strong U.S. dollar support last week, and as we approach the Fed meeting next week and the employment report this Friday, I suspect that we'll see a strong rally in the U.S. dollar and some selling pressure in the euro and the pound. Right now we're seeing this trend reversal in the fundamental structure of the currency markets in that the U.S. government and the Federal Reserve is looking to lower interest rates, and foreign markets like the euro and the UK government, the British pound, they're looking to raise rates, which causes some selling pressure in their currency and a reversal in what's been an extremely long-term uptrend in those markets without any major price retracement. So I suspect we have the fundamental underlings here for a trend reversal in the currency sector and a strong dollar push through the end of December. So I'm aggressively buying U.S. dollar and shorting foreign currency. Exclude the yen from that picture and the Canadian dollar. We've been short the Canadian dollar from near the highs here, even though we've been chasing it on the way up. To a certain extent, this market has a lot more downside to it, but near term, I'd wait until we broke 98.60 before getting back short, and I'd cover any short positions at the current price levels. Moving on to other markets, we're going to see a World Ag Supply and Demand report next week in the grain sector. Grain markets have been seeing some selling pressure the last few days, but overall remain in a very bullish technical trend, and I suspect that any selling pressure we see, especially in the soybean market as well as corn, should be bought into aggressively. Outside of that, crude oil had one of the biggest down weeks in its history last week, and I suspect that we'll see the beginning of a major price correction in that market, something we've been expecting for a long time, and you can still capitalize with some bear put spreads and things of that nature to play to the downside in a defined risk environment. I highly recommend crude oil and RBOB gasoline as your main targets for price corrections in the energy sector. Natural gas may have some supportive elements, but could see a price correction in sympathy with the other energies. Last but not least, let's take a look at the metals sector. Because of the action we're going to see in the currency markets, I expect with crude oil collapsing that the gold and silver markets do not have much more life left to them. Looking at it technically, we even see the potential for continued downside to maybe the 750 area before any type of price relief would come in, and ultimately a target of $700 an ounce on gold, which would be a major price correction in silver in sympathy, maybe down to about $11.50, $12. This may not happen next week, but it's certainly setting up the trend for that to occur, and I would look for a break to about 772. We closed below that mark on front month gold that would be a very strong indicator to me that there's a major collapse on our hands here. That'll do it for me, James Mount, MountReport.com, with the week ahead. See you next week. Bye-bye.
That was James Mount from James Mount Trading Group with this commodities outlook for the week ahead. And that's it for today's edition of PM Exchange. I'm Remy Hokie. Join us tomorrow morning for your latest news update right here on ForexTV.com. Have a good night.